There's a three-digit number that secretly controls your entire financial life, and most people have no idea how it works. It decides whether you can buy a house, lease a car, or even get approved for an apartment. It's not your bank balance, it's not your salary, it's your credit score. The higher your score, the more doors open. The lower your score, the more expensive everything becomes. Think of it like your GPA, but for money, and it actually matters in real life. A credit score is basically your financial reputation turned into a number. It ranges from 300 to 850. Below 580, you're in bad credit territory. Banks see you as high risk. Getting approved for anything is painful. 670 to 739 is good credit. Most people live here. You're doing okay. 740 to 799 is very good credit. You're in the top tier. 800 and above, that's excellent credit. You're basically financial royalty. Banks compete for your business. Want a mortgage? Your credit score determines your interest rate. The difference between a 620 score and a 760 score on a $400,000 mortgage, about $100,000 extra in interest over 30 years. Not a typo. Want to rent an apartment? Landlords check your score. Bad credit means you might not even get considered, or you'll need a massive security deposit. Your score isn't just about borrowing money, it's about access to opportunity. Your credit score is calculated using 5 main factors, and they're not weighted equally. Payment history is 35% of your score. This is the big one. Do you pay your bills on time? Miss one credit card payment and your score can drop 100 points. Miss a mortgage payment? Even worse. This is why payment history is king. Set up auto pay. Treat due dates like they're sacred, because to your credit score, they are. Every on-time payment strengthens your score. Every missed payment is a wound that takes years to heal. Credit utilization is 30%. This is how much of your available credit you're actually using. Let's say you have a $10,000 limit on a credit card and you're carrying a $9,000 balance. That's 90% utilization, and your score is screaming in pain. The rule? Keep it under 30%. Under 10% is even better. This is the secret weapon most people don't know about. Here's the hack. You don't have to pay off the balance before the statement closes. Just pay it down before that date and boom, lower utilization reported. Length of credit history is 15%. How long have you had credit accounts open? The longer, the better. This is why closing old credit cards can hurt you. Even if you don't use that card from college anymore, keeping it open helps your average account age. Lenders like to see a long track record. It shows you're not new to the game. You've been handling credit responsibly for years. You can't rush this factor. Time is the ingredient. Start building credit early and let the years do the work for you. Credit mix is 10%. Do you have different types of credit? Credit cards, car loans, student loans, a mortgage? Having a mix shows you can handle different kinds of debt responsibly. But don't go opening a car loan just to improve your mix. That's expensive and unnecessary. This factor matters, but it's not worth stressing over. Only 10%, remember? Credit mix develops naturally over your lifetime. You'll get a car loan when you need a car, a mortgage when you buy a house. Let it happen organically. New credit inquiries are 10%. Every time you apply for credit, the lender does a hard pull on your credit report, and it dings your score a few points. 1 inquiry? No big deal. 5 inquiries in 2 months? Red flag. Lenders think you're desperate or financially unstable. So stop applying for every credit card offer that slides into your mailbox. Be selective. Apply only when you need it. If you're rate shopping for a mortgage or car loan, multiple inquiries within a short window count as 1. The system knows you're comparison shopping, not desperately applying everywhere. Here's how it all comes together. 3 companies, Equifax, Experian, and TransUnion, collect data about your borrowing and payment behavior. Credit card companies, banks, and lenders report to them. Then a formula called a FICO or Vantage score crunches that data and spits out your score. The scary part? These 3 bureaus might have slightly different information, so your score can vary between them. That's why you'll see people with 3 different credit scores. Fun, right? The system is complex, but understanding it gives you power. Knowledge is literally money when it comes to credit scores. Let's talk about what separates good credit from bad. A 720 score gets you approved with decent rates. A 620 score gets you approved with terrible rates, if you're approved at all. The difference isn't just a few percentage points on a loan. It's the difference between building wealth and bleeding money. A lower score means higher interest on everything. That's money that could have been invested, saved, or used to actually enjoy life. Instead, it's going to a bank as a penalty. The system rewards those who already have good credit and punishes those who don't. It's not fair, but it's reality. So let's beat it. So how do you check your score? AnnualCreditReport.com gives you a free report from all 3 bureaus once a year. Your credit card company might show your score for free in their app. Apps like Credit Karma and NerdWallet show estimates. Just know that the score you see might not be the exact score lenders use, but it's close enough to track progress. Check your report regularly. Look for errors. If something's wrong, dispute it. Mistakes happen, and they can cost you points for years. Now, let's kill some myths. Myth 1. Checking your own credit hurts your score. False. That's a soft inquiry. It doesn't count. Myth 2. You need to carry a balance on your credit card to build credit. Absolutely false. Pay it off in full every month. You're just paying interest for no reason. Myth 3. Closing a credit card improves your score. Nope, it usually hurts because it reduces your available credit and increases your utilization ratio. Myth 4. You need to be in debt to have good credit. Wrong. You need to use credit responsibly, but you don't need to stay in debt. What if you have 0 credit? You're a ghost. No credit history means no score. Here's how to build from scratch. Start with a secured credit card. You put down a deposit, say $500, and that becomes your credit limit. Use it for small purchases, pay it off in full every month. Get added as an authorized user on someone else's card. If they have good credit and pay on time, it helps you. Just make sure they're responsible. Consider a credit builder loan. You make payments, and once it's paid off, you get the cash. It's like forced savings that builds credit. What if your credit is already bad? First, stop the bleeding. Pay everything on time from this moment forward. One missed payment can haunt you for years. Pay down high balances. Get that utilization under 30%, even under 10% if you can. This can boost your score fast. Dispute any errors on your credit report. Sometimes negative marks are mistakes, and getting them removed can boost your score fast. Don't close old accounts. Keep them open even if you're not using them. Time heals credit wounds, but only if you stop making new ones. Credit cards build credit. Debit cards do not. This is crucial. When you swipe a debit card, you're spending your own money. There's no borrowing, so there's nothing to report to credit bureaus. Credit cards are loans. Every time you use one and pay it back, you're proving you can handle credit. That gets reported. That builds your score. This is why adults with only debit cards often have no credit score. If you're scared of credit cards, start with one, set up autopay for the full balance, and use it only for recurring bills. You'll build credit without risk. So how long does it take to improve your credit? If you're starting from scratch, expect 6 months to a year to get a score. If you're recovering from bad credit, it depends on what damaged it. A missed payment? It stays on your report for 7 years, but its impact fades over time. If you start making on-time payments now, you'll see improvement in 3 to 6 months. A bankruptcy? That's 7 to 10 years, but even then you can rebuild. The key is consistency. Good credit isn't built in a month. It's built in years of boring, responsible behavior. The biggest mistakes people make? Ignoring their credit until they need it. By the time you're applying for a mortgage, it's too late to fix bad credit quickly. Maxing out credit cards. Even if you pay the minimum, high utilization murders your score. Applying for too much credit at once. Every hard inquiry adds up. Co-signing for someone with bad credit. If they miss payments, it's your credit that suffers. Not checking for errors. Mistakes on your report can cost you points for years. Check regularly and dispute anything wrong. There are tools to help you stay on track. Credit Karma and NerdWallet show your score for free and send alerts for changes. Experian Boost lets you add utility and phone payments to your credit report for a potential score bump. It's free and can help. AutoPay on all your accounts ensures you never miss a payment. Calendar reminders before statement close dates to pay down balances and lower utilization. It's not about being paranoid, it's about being proactive. These tools give you control and peace of mind. Credit scores aren't about morality, they're just a tool lenders use to assess risk, but understanding how it works isn't optional, it's survival. The good news? It's not random, it's not luck, it's math. And math can be learned, manipulated, and mastered. Here's the long game. Start early, pay on time every time, keep your utilization low, don't chase credit, let it build naturally, be patient. Good credit is boring. It's years of paying bills on time, not opening too many accounts, and not making stupid mistakes. There's no hack, just consistency. Your credit score is one of the few numbers in life that you have almost total control over. It's not about where you were born or how lucky you got. It's about the decisions you make month after month, year after year. And the rules are clear. Play by them and you win.
Ignore them and you pay, literally. So take control, check your score, fix your mistakes, build your history, and watch as doors that were once locked start opening. Because good credit isn't just about borrowing money, it's about freedom. See you next time. Thanks for watching. Please like and subscribe for Make Life Easier as a Citizen.